That's closing bell on Wall Street announced market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. RBC Capital Markets, Amy Wu Silverman, as well as Yahoo Finance's Jared Blikre joining us here to break down the moves today. Jared, let's start with you, my friend, on that close.
All right, after we last talked 1 hour ago, we saw a little bit worse prices in the Dow. We hit the low of the day about 30 minutes ago. Then off of those lows, still down only about 200 points, just shy of 0.5% for the day. Also taking a look at the NASDAQ, closing pretty close to those lows, down about 38 basis points or 0.4%. And the S&P 500 down 0.3%, and a pretty similar looking chart right there. I will recap the bond market action one more time. Here's the 10-year T-note yield. Just because it's so large, 9 basis points to the downside, ending the day at 4.33%. The 30-year ended at 4.87%, also down 9 basis points. And interestingly, as I noted before, the U.S. dollar index up on the day, not moving in the same directions as those yields. And we kind of see this play out in the sector action. Real estate is a leading sector, very interest rate sensitive. It is up 1.65% today in the upper left. Following that, we have some defensive action in the leaders. Utilities, energy, and staples all in the green, the only ones in the green. Tech just barely trading to the downside there. But to the downside, we do have XLI. That's industrials leading the way down 1.13%. Also communication services, consumer discretionary. And those are some cyclical sectors. So cyclical is just not doing that well today. And we'll take a look at the NASDAQ 100 here. Kind of split action with regard to the mega caps. We see Broadcom and Alphabet up. Alphabet up 1.65%. Microsoft just barely in the green. Apple down 1.3%. Meta down 2.5%. And Tesla down 1.33%. Seeing some outsized action to the downside in Charter. It looks like PanW, that's Palo Alto, also Warner Brothers Discovery, and Airbnb, all those down 3% or more. We'll take a look at the Dow mixed board there. Some downside action in United Health. That was off of earnings, down 7% today. That stock has just been cut in half on the year. Boeing also down about 4%. And then if we take a look at the transports, mostly red, all red board right there. So really downside action here. Uber down 3.85%, UPS down 10%, FedEx down 3%, Southwest Airlines down 4%, and Norfolk, the railroad, down about 3%. I'll leave it on our leaders index to see what closed in the green. Looks like Korean stocks and some liquid bonds and small oil, not a whole lot else to get excited about. Leading to the downside, we have cannabis, those transports we were talking about, retail, and also the ARC Innovation Fund. Back to you.
All right. Thank you, Jared. Amy, your thoughts here on the trading day.
Look, I think one thing that's going on is we're a little bit in the summer doldrums. I think I started with that. And it's really interesting because it's a very weighty week for earnings, but like a lot of it, I think, was kind of priced in already, and there's a lot of wait and see still with the tariffs. One thing I would give a little bit of warning on is historically when you get to August, that's when you get a big VIX return, about 18% on average over the last decade. So there are volatility potholes potentially ahead, especially as we hit those summer doldrums and potentially they become liquidity vacuums.
You know, when you come on the show, Amy, we often talk about the market, and you compare the market, which I always love, to animals, various animals doing in various,
what does that say about me?
Various activities. It means you're creative, Amy. That's what it means. And so we had paddling duck, and then last time you were on the tribe, it was lobster in a pot. We were just talking off camera. You said we're back to paddling duck. What is the paddling duck?
Essentially, all it means is when you see a duck paddling on the surface of a lake, he looks calm and cool and collected, but those little feet, they're really moving underneath. And that's happening, right? Like you are getting, rotations underneath, but sometimes you don't see them. And this, we call it dispersion. So this big technical divergence between index volatility and single stock volatility, you tend to get that. Now, what I said happened to this duck last time was he fell off the waterfall, and then we had this lobster slowly cooking in a pot and we didn't notice. And that's what I'm a little bit concerned about going forward, because that tends to be seasonally what you get in August versus what you have in July.
All right, paddling duck, you heard it here first. Amy, it's always great to see you, especially on set. Thanks for your time today.
Thank you.
Robert Sockin is Senior Global Economist at Citi and joins us now. Welcome, Robert. It is great to have you on the show. I want to start with trade and tariffs, Robert, the U.S.-EU deal. And I just wonder, from your vantage point, Robert, whether you think Trump got a good deal for the U.S. I mean, I got to tell you, I listened to the EU member states, you listen to France and Germany, Robert, and boy, they don't sound happy at all, which makes me believe maybe Trump did get a good deal. But how do you see it as an economist?
Great question, and thank you so much for having me. I think what we're seeing as these trade deals are starting to solidify is that the administration is ending up in a place where they are largely getting what they're asking for in return for not putting tariffs as high as may have been threatened on Liberation Day, but then also threatened as well in recent weeks. You saw that with the EU. Much higher tariff rates were threatened on the EU several weeks ago. We are now at a lower rate than that. But from the EU perspective, these figures are still quite high. Now, there are some relative winners in there for the EU in terms of the auto sector, for example, with that 15% tariff rate, lower than it would have been otherwise for them. But I think you have to look at this and say that the Trump administration largely got the better side of this. And that's what we've been seeing throughout these trade deals. The administration is largely ending up in a place that they wanted to end up in. That
15% baseline tariff, Robert, I mean, that is material. I'm just curious how you think through that. What are the implications for growth there?
Yeah, absolutely. And I would say relative to, let's say, a month or so ago, tariff rates are ending up a bit higher than we've been baking into our forecasts. We were expecting something more along the lines of the effective tariff rate on U.S. imports would end up somewhere near 15%, give or take. With all the announced policies to date, we're a bit below 20 at the moment. And I think when all the deals solidify and more sectoral tariffs come through, we're going to end up somewhere probably around a 20% effective tariff rate for the foreseeable future. That is quite high. We think it's going to slow U.S. growth as we go more into the year and into next year. It's going to raise U.S. prices. We haven't seen quite those effects yet, but we think it's just largely a delay before the storm, and there's another shoe to drop as companies start to put through these price increases, and you start to see that weigh on real incomes in the U.S. and consumer spending. In addition, a lot of those things that were bought earlier this year, there's going to be payback for that spending in the second half. If you bought an iPhone in February, you don't need to buy one in October. So those two effects, higher prices eating into incomes and payback from the front-loaded spending, is going to weigh on growth as we move forward.
Well, it's interesting, Robert, because as we try to track where this lands on the value chain, whether it's Robert and Josh, they're going to eat it, or the seller. When I listen to Trump administration officials, Robert, what they seem to suggest is it's going to be the foreign producer. That's who's going to eat it. What do you make of that argument?
Yeah, and this is a really important question. Which parts of the economy and where in the world are these tariffs going to end up? Because they have to end up somewhere. We know that they're on. And we've seen some examples, only a few, of foreign exporters absorbing the tariffs into their margins. The big one being Japanese automakers. We saw a significant decline in their export prices to the U.S. That's likely not sustainable. I think now that a deal has been made with Japan, you'll probably see those prices gradually move up over time. But largely, our expectation is that this will be shared among various economic actors, but most of it is going to fall on U.S. companies and U.S. consumers. So, to date, we haven't seen as much of that. I think companies are waiting to see where tariffs land before putting through those price increases. And ultimately, I don't think it's the foreign exporters that are going to absorb the majority of it. I think the majority of it's going to be split between U.S. firms and U.S. consumers.
Robert, while I have you as an economist, of course, we have to talk about the labor market, big jobs report coming up, Robert, on Friday. What are your expectations there?
Yeah, a lot of views about what the report could end up. Our U.S. economics team thinks it's going to be a fairly soft report. I think what we've seen is it's been very hard to time these labor market reports in terms of the slowdown that we're expecting. So far, labor market has held up quite well. We saw that with the JOLTS data today. It's largely a stable labor market. So my own view would be that it's still going to be a fairly decent report. But as we get later into the summer and certainly into the fall is when you're more likely to see that deterioration in the jobs number and a bit of a pickup in the unemployment rate. But given what we've seen so far over the last several months, my guess would be that we'll see another solid, relatively solid employment report with the unemployment rate staying fairly low. But again, those risks are still there. And eventually we're going to see, I think, the labor market turn.
And finally, Robert, Fed decision on deck as well. The expectation they're gonna stand pat. They're in wait and see mode. But what are your expectations there, Robert? You know, what do you think we're gonna see and hear from Jay Powell?
Yeah, absolutely. And they're juggling all of these different things that we're talking about. Where are tariffs going to land? How are they going to play through the economy? How long is it going to take for those effects to play through the economy? As noted, it's been kind of slower to get off the ground than we've been expecting. So I think they're still very much in that wait and see mode, given the policy uncertainty of where the tariffs land and the economic uncertainty of their ultimate effects. So I think that they're going to stand pat at their meeting this week, but maybe leave the door open that as they're seeing these tariffs land higher than many were expecting, the likelihood that they'll have a negative effect on the economy in terms of lower growth and the deterioration of the labor market are higher now. And that opens the door a bit for a September rate cut, which is my expectation. Again, a lot of moving parts there. I don't think you'll see a lot of that in the statement. I think it's really going to come out in Chair Powell's press conference that they are open to easing as they get later in the year if these economic effects do come through. But right now, there's no reason that they shouldn't be in wait and see mode. And I think that's largely what you're going to hear from the statement and from Chair Powell this week.
All right. I'm going to be watching closely. I know you will too, Robert. Thank you, sir. Appreciate it.
Thank you.
Turning now to Starbucks as its third quarter results just hitting the wire. Let's get to Yahoo Finance senior reporter Brooke DePalma with the latest. Brooke.
Josh, this certainly was a better than feared report, and that's why you see the stock moving higher in these after hours trading. When you take a look at the global same store sales numbers, we did in fact see a decline of 2%, and that was more than what Wall Street had expected, a 1.5% decline. But big picture here, what investors are really focused on is this turnaround effort here in the U.S., and that's why we're seeing that better than feared red brick here. U.S. same store sales declined down about 2%, and that was just slightly less than the 2.53% that Wall Street had expected. Also, when it comes to foot traffic, that was also slightly higher, albeit a decline, than what Wall Street had expected. We saw foot traffic in line with the decline that we saw this previous quarter. Foot traffic, or transactions rather, were down 4%, and that was better than feared. Wall Street had been expecting a 4.5% decline when it comes to transactions this past quarter. If you take a zoom out and you take a look at revenue, the company did beat on revenue for the quarter, coming in at $9.46 billion. That was higher than what the street had expected at $9.29 billion. But adjusted earnings, that was a big miss there. Adjusted earnings came in at 50 cents. That was about 15 cents less than what the street had expected. And we're getting a bit of color there from the CFO. She said within the release that the company made a quote unquote non-recurring investment in its leadership experience and also incurred a discrete tax item. But we do see the shares rallying here, and that's largely because the CEO, Brian Niccol, there is really making headway with this turnaround effort, according to what he said in the release, that they have fixed a lot and done the hard work on the hard things to build a strong operational foundation. He went on to say that based on his experience of turnarounds, they are quote unquote ahead of schedule. Of course, Brian Niccol led the turnaround over at Chipotle.
And Brooke, what about the China business specifically? What are we seeing there?
Yeah, what we saw as far as China goes is same-store sales increase only about a tick higher than what Wall Street had expected, up 2% compared to the 1.44% increase in same-store sales growth that Wall Street had expected. But that has largely been a turnaround story there. We know that Starbucks had previously said that they are seeking out a strategic partner within that region. Just earlier this month, the company did tell Yahoo Finance that they're quote unquote looking for that strategic partner with like-minded values, and they want to retain a meaningful stake in the business. Certainly what we're seeing there is an improvement. Once again, same-store sales within that region up 2% this past quarter.
All right. Thank you, Brooke. Appreciate it. More market domination overtime. That's coming right up. Online trading platform eToro is expanding trading accessibility. Users can now trade 100 stocks and ETFs around the clock, 24 hours a day, 5 days a week. And Yahoo Finance executive editor Brian Sozzi discussed that change with the CEO of eToro earlier today.
We're expanding a lot of the trading universe and trading hours on the eToro platform. Announced today more 24 hours stock trading on the platform, as well as near 24/5 trading in on-exchange CME traded futures, a new type of futures product that's very exciting for our users worldwide, and very excited also about revamping tokenization in eToro, launching those 100 stocks that trade 24/5 on the eToro platform as tokenized assets gradually available to people with the eToro crypto wallet.
Yoni, as someone that is laying the groundwork for 24/5 trading, of course, you and your teams, but take us inside how difficult it is to pull this off, given the legacy infrastructure and stock trading that still exists out there.
I think gradually we're going to see the entire world of trading moving to not only 24/5, but 24/7, with, of course, blockchain in the back end being an important part of that transition into 24/7. I think if I take it back to 2017, we used to trade only 24/5 and then used to pause crypto trading during the weekend. And I remember a lot of dialogues in eToro shifting from 24/5 to 24/7, realizing that people want to trade crypto over the weekend as well, and it's open 24/7. And I think just the same way that we did that transition back in 2017, the large financial institutions like the stock exchanges, the clearing houses, et cetera, will gradually all move not only to from T+2 to T+0 or to real-time clearing and settlement, but that transition will also shift trading in global assets to 24/5 and then to 24/7.
What would it mean to go 24/7 trading? What does it mean to the earnings power of a company like eToro?
Well, I think generally the fact that we have customers from 75 different countries, all in different time zones, it's always great to have stocks that are available for longer hours for those in Asia or in Europe that are trading in very different trading hours than our customers in the US. So all in all, I think it will definitely increase engagement of customers with the various markets on the eToro platform.
What do you think regulators need to see, Yoni, to get 24/7 on the books? And then secondarily, is this something that happens in 2026?
I think 24/7 is probably going to take longer, simply because the markets themselves are usually closed over the weekend, and there's still liquidity issues of basically who's driving the liquidity and therefore the spreads in the market. I think 24/5 is happening now in 2025 and 2026, and it's gradually happening cross asset class and also happening with more and more stocks available for 24/5 trading.
The latest buzzword in the industry is tokenization. I mean, you just mentioned it yourself too. Why is tokenization so important?
Well, we've been a very big believer in tokenization since actually 2011. So when I started buying Bitcoin for eToro's treasury in 2011 and looked at the Bitcoin protocol, trading basically a protocol that's open 24/7, that our customers and generally anyone can send and receive assets on the blockchain 24/7 across the globe. I think that's what sparked a lot of our excitement around Bitcoin and blockchain in general. We were very early on to actually write the Colored Coins paper back in 2012, which was about how to tokenize real world assets on top of the Bitcoin protocol. These were very early days. Vitalik actually from Ethereum took a part of writing the paper and some of the code of what we did back then in 2012 and 13. And I think, as we all know, these processes take time because they require also the large financial institutions, the exchanges, the banks to participate, the regulators to understand better blockchain technology and how it can be used to digitize real world assets or digitize traditional securities. And I think in 2025, we're seeing huge progress in regulation, both in Europe and hopefully coming into the US now as well. And that new framework of regulation enables basically the issuance and the transfer of tokenized securities, tokenized stocks, tokenized real-world assets on top of the blockchain. And I think that unlocks a lot of possibilities for future features that currently are just available for blockchain assets and digital assets to come into traditional finance.
What are some of the 100 stocks you're launching with?
Basically, the top 100 most liquid stocks there are on eToro, part of the S&P 500.
All right, great interview there by our very own Brian Sazi. Meanwhile, luxury EV maker Lucid trying to accelerate the brand with celebrity status. It's the latest company announcing a star spokesperson. This time, it's actor Timothee Chalamet, who was named Global Brand Ambassador. And to break down the company's move, I want to bring in Braz Subramanian, Yahoo Finance's senior autos reporter. Braz, walk us through this news.
Well, it kind of caught my eye because we just came off, the heels of Sydney Sweeney's kind of, signing with American Eagle there, with being like the new campaign for the fall. This actually, Lucid's move with Chalamet is actually Timothee Chalamet, as I should say, is actually a multi-year deal, right? As global brand ambassador, you see him there in the new Gravity SUV, and this is part of the whole deal, right? They're launching this new SUV. It's going to be kind of hitting showrooms in sort of force this summer and the fall, and he's going to appear in some commercials with that car. And it's funny because Lucid said that they sort of got the idea of approaching Chalamet because he apparently was seen driving one of the Lucid vehicles in 2023. They saw that, thought about, he's a kind of like an icon at the moment, right? For both for his generation and for acting, and multi award winner, and nominated for an Oscar for the Dylan movie. So it's not what's not to love here if you're Lucid, right?
So let me ask you this: when you partner with a Hollywood heavy, right? Does it actually? Do we know whether that, if and how that actually impacts your financials? Does that move cars? Do people say, I was on the fence, but then I saw Timmy and he swung me right over. Now I'm in. Is that what happens?
I think on a small level, maybe, but I think the big thing is that it's sort of having Timothy and his sort of presence and his visibility with like Gen Z, for instance, now attached to your brand. People start talking about it. Say, did you see Chalamet now was in with Lucid cars? Something like that.
Yeah.
Plus, Lucid is a green brand, an EV maker, an American brand. So you can see that tying in with Chalamet, who I understand is a very outspoken about environmental issues and things like that. So I think that sort of works in everyone's favor there. I think that's why you were seeing this. But yeah, it definitely caught my eye. It was a little bit out in the blue, but you're seeing more and more celebrities, A-list celebrity, he's A-list, right, doing stuff like this, and it's not seen as a black mark these days.
What about, just finally quickly, kind of just Lucid's place, Praz, in the broader EV market? How's it changing? How's it evolving? What's next for them?
They came out and they did sort of the Tesla model. They came out at the high end with in their case, the Lucid Air sedan. With the Model S, that was a very high-end sedan for Tesla. Still is these days, $80,000, $90,000, $100,000. So they came there at that level, with a very compelling product, high technology, great feature set. And now that's coming down, trickling down to more mainstream products. The Gravity SUV will be a little bit cheaper, but more of a appeal to a broader subset of people who want SUVs. And then they're going to go with what they call a mid-sized vehicle that's coming out in a couple of years, a more modestly priced, like think of Rivian R2, right? That's supposed to be the big volume seller for them. Lucid will do that same thing. And so you have someone like Timothy on, I keep calling him Timothy like we're buddies, but Chalamet is there now to sort of, bring more attention to that, highlight their cause. Maybe he'll be seen driving more vehicles around.
I think Chevy, for its ZR2, should think about partnering with Josh Lipton. I think could really...
they just put it right back here, midnight edition.
It's just an idea I'm throwing out there for Chevy. It's just something to consider.
And at the end of the show, you can just put your glasses on and drive off.
Perfect. That's good television. Thank you, Praz. Time now for what to watch Wednesday, July 30th. We're going to start off on the earnings front. We got a huge day of earnings with two Magnificent Seven names reporting on Wednesday. That would be Microsoft and Meta. Microsoft announced results for the fourth quarter after the markets close. CapEx and AI, both key focuses for investors in the quarter. Analysts also expecting commentary about how AI is making the company's workers more productive. And we got Facebook parent company Meta reporting second quarter results after the closing bell as well. Ad spending in focus for Meta in Q2. Analysts also anticipating that Meta may scale back spending on its Reality Labs division to focus more on AI, a theme that we've seen so far as big tech CapEx continues to rise. And then moving over to the Federal Reserve, the Fed kicked off its two-day FOMC meeting on Tuesday and is making its decision on interest rates on Wednesday. The decision will be followed by a press conference from Fed Chair Jay Powell. Yahoo Finance will begin Fed Day coverage on Wednesday at 2 p.m. Eastern. Well, that'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend. I've got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the things affecting your money. Stay tuned.